Okay, so let's go live. Let's go live. I think we've waited a lot. So back to what I was saying. Let me just give a message before we continue. Let me just tell them we've started. Okay, so now back to what I was saying. It was this. Now, why I suggest using something less than 1% is better. You could do something based on your psychology, right? My psychology is based on my um calculations. I did my calculations based on my country's economy, the worth of dollar in my currency, how much impact it will make on my psychology if I should lose over $100 in a trade, and how much effect it could also make on my psychology if I should win $100 per trade. So all these are stuff you should put in calculation before you conclude for your own risk management when it comes to this mentorship. So losing this in a trade, losing $100 in a trade, how much impact will it do for you? Just imagine what effect would it have on your psychology to lose this money? Because as much as calm you feel you would be when you lose this money from the market, you don't know that the same impact it makes in your head for being scammed over $100 is the same impact it will take when you lose $100 from the market. So you have to know how much effect. Some are richer, some are not. Manage your risk properly and know how much effect it would make for you to lose something like this. You know how much pain it would cause you. And then those of you who are richer know if it's lesser, you could increase a percent. You could use 1%, but that's up to you. It's not advisable for me. It's up to you. Right? I use 0.5% because based on my calculation is what's best for me. And now, when it comes to using 0.5%, it's only on high probability setups. Now, setups which I see are very, very clean. I won't risk 0.5% when I'm using a momentum confirmation. You guys know what momentum confirmation means. When you have a POI, price break structure. Let's say you had a liquidity stack up into your POI and price mitigates your POI. Now that happens, let's say you're using this, you want to trade off this, and then you see price starts to do some kind of like bearish momentum coming out from the POI because this was a corrective price action, something like this. Okay, price was doing a corrective price action into your POI, and then you see kind of like a bearish momentum like this back down, which means which is something like this, price is reacting from your POI. I will not risk 0.5% on a setup like this because my lower time frame confirmation wasn't of something like this. I didn't get something like this on the lower time frame of this. Instead, I'm using the momentum. So if I'm trading up the momentum, which is the momentum shift, the best I would recommend is use something lesser. Risk your reward lesser because the best fake out you could actually see is momentum shift. Price does that a lot. It works sometimes. It's an entry confirmation, which I also use. So I won't say momentum shifts are not good. They are good. You can also use them because you could see over here, the momentum was what gave the entry. Although on the lower time frame, it would be something like this. But on this time frame, the momentum shift was what gave the entry. You could see price was moving into this and then got very, very slow over here. There was no sign of bearish momentum from here. Then you could see how price reacted. Some people do add volume when it comes to using momentum shifts. They use the volume to see how much impact this little momentum was able to create on, the volume. Don't use your average risk, which you would risk on a clean setup on that kind of setup as well. Because if I should use 0.3%, 0.5% on a 20 pips lot size, and I lose, let's say 15 to 13 pips, $15 to $13, it's not going to make that much impact on me. All right. So if you want to be trading, make sure what you're risking on one trade is not going to affect your decision on the next trade. Okay, so if you want to be trading from this kind of, let's say, momentum shift or something like that, and a momentum shift is something that could, easily get invalidated, I would suggest you use a lower lot size. So if I should be using 0.3%, and then let's say 20 pips invalidation comes in, it's not that much, to affect my decision in the next trade. My psychology would still be intact, and then, I will be able to trade properly. I just remembered something. Let's add something to this. Let's add one more. Enough here. Okay. How many losses before I quit trading? Hey, this is a very, very important part as well. I forgot to add it into the list, but it is also very, very important. Okay, because when it comes to this, a lot of people miss, they don't take losses that serious because they feel like, whatever they do, winning is the priority, and they believe they're going to win whichever way. But that's not how it works. Trading is winning and losing. So if you are planning to win, also have a plan for when you lose. All right. So how many trades do you want to see invalidates you before you're done for that day? Because most of you, for those of you who have been with me for a very long time, you would understand that if I should take 2 losses, the maximum at 2. If I should take 2 losses, 2 straight losses, it's enough for me to quit that day. You won't see me trading that day. I'm done. All right, so I'm done. I'm going to leave the rest and then come back the next day to try and recover that which I've lost. But I would not try to be dumb and keep trying to trade because I know losses, I don't work well with losses. So why continue trading when I know once this trade has been invalidated, once I've been invalidated twice or 3 times, I won't be able to focus more on taking a proper trade. My decisions will be affected by my losses. So know how many trades you want to lose, before you decide to stop trading. Now, let's work on the risk management as well. Let's add some decisions to make. Please, I want you guys to work on this, all right? From this which I've listed, draw out your plan and send them to whichever of the group, the Telegram or the Discord. All right, send them to any of them. And then the rest could also form something of your own. You could write this down, maybe keep it with you whenever you want to trade, or before you go to trade, you look at the decisions which you've given to yourself before you trade. Because after this stage, if you're not able to do something significant when it comes to your psychology and your understanding of the market, then it's going to be very, very difficult for you. All right, so just take this down. Then on your free time, maybe today or tomorrow, draft out your plan and then send it to the group, right? So risk management per trade. Let's say how many percent would I fix on a high in this trade? Okay, you want to also see what invalidates your set? Yeah, someone wants to say something.
Yeah, would news affect any part of our risk?
Yeah. You said what? Sorry, I couldn't hear you.
Would news events?
Yeah. That's based on you as well. You want to know, do you trade on news events, or do you think news are excuse to move the market? For me, I think news are excuse to move the market, but that doesn't mean you should trade on high impact news. I do trade doing news events, but not all. Okay.
I feel what is not there yet is having a target for the day in terms of returns.
Having a target, a general target. Let me put it in a very understandable way. For me, I don't have an overall target for the day. I just know how much I want to waste and what invalidates my setup, and how many hours I want to spend in the trade. Now, you see, when it comes to targets, how many hours do you want to be trading? If you're trading for 3 hours and you say you have a target, let's say you have a target of $100. What happens if within the next 3 hours you only made $60? Would you keep trading? Don't you think that would invalidate most of these rules if you have a general target? You get my point now, right? Yeah. Now, you have how many hours you want to trade in the trade. There's every probability that you're going to be making less within that 3 hours or 4 hours or 5 hours, There's a probability that you're going to be making more. So I don't think having how much you want to make in a day is a significant rule. It's based on you. Okay, making
Yeah.
1% a day is very good for me. Okay, making 1% a day is good for me, but that doesn't mean I can't make 5% in a day. You get what I'm trying to say, right?
Yeah.
So that
Yeah.
doesn't mean I can't make 10% in a day. What happens if you decide to make just 2% in a day and you have a very good trade which is about to make you about 5%? What would you do? Would you close the trade?
Oh, yeah.
You understand? So you have to know which is more important and which is just bullshit. Okay, let me add something else that would help. You get what I'm trying to say now, right? What's the break-even point? If you're trying to trade and you're in a position, how long will it take for you to break even? You know, how much reaction do you want to see before you break even on that particular trade? What's the
Okay.
take? You know, how many percent do you want to take off the trade? How many percent do you?
This is very realistic.
This is more important than even having a target, because when you have a target, it's just, those are not even the most important stuff. These are the important stuff, right? This is what you want to understand, because trading is more very broad than just having candlesticks on your chart. This is what helps you to make money. This is how you make money. Being able to read the other blocks and stuff like that would only help you have a good chart. You get what I'm trying to say now, right?
Yeah.
It's very easy for you to be able to understand how to do technical analysis. Why I decided to do the risk management first before we go into technical analysis? It's very easy for you to understand that this is liquidity, and then, you know, this is a fair value gap, and you could take a trade from the mitigation. All right. It's very easy for you to understand this, you know, maybe after practicing it for maybe 2 to 3 months, but it won't be easy for you to understand all this on your own. So instead, what you do is you create charts, and then you send it to the social media. People compliment you for your accuracy, but then you're not making money because you don't know all this.
Yeah.
Okay, so once, and also you can also not know how to do the technical analysis part, but when you know how to manage this, you could easily even trade up people's charts. You get what I'm trying to say? Once you know how to do all of this, you come online and you see a setup, you would know how to manage that setup when it comes to trading it. If you know all this, you won't blame anyone when you lose a trade, because someone could lose a trade, have an invalidation on the setup, but then you did not lose anything because all this were intact. You get what I'm trying to say now, right? Imagine let me say, Chima sends a chart, and then he marks this zone. All right, so you know Chima has a very high accuracy as well, and then you are like, okay, I want to trade Chima's charts today, and then you decide to take Chima's chart, and then you get invalidated. You see, this gets invalidated. Now you won't blame Chima and say, shit, that guy just posted shit, and I just copied shit. But instead, you will be like, all right, losing this, you might end up even losing just maybe $2, $3, because one, you might not even lose anything at all because this never gave a confirmation. According to your rules, do you have a confirmation before you take a trade? If you do have that, you won't actually blame him if he loses his trade. He can lose his account, but you would also be safe because you have your own plan. Okay. Exactly. So now what I do is when I come to the chart, I want to take a trade. Let's say I'm done analyzing the chart and then I have a POI. What I do is now I just have to wait. Now they say trading is more of waiting than even, you know, placing a trade. But what I do is when I'm waiting, I just go through all of this. All right, so this is written down. The answers of all this to me personally is already written down in my journal. My book is here with me already. So what I do is I just go through the book. Now, when it comes to MT4, this is all you have to do on your MT4. All this other block stuff and that is being done on your trading view. You get the difference now, right? MT4 is not for you to pick a zone. MT4 is for you to manage your risk and know if it meets your plan. Your trading view is to help you see if the trade is good enough for you to take, and if your zone, you know, is valid based on liquidity, premium and discounts, imbalance, or whichever it is. All right. So that is not what moves your trade. That could give you a very good reputation as a trader, but we're not here for reputations, are we? We're here to make money. So when you're trying to make money, you should understand that these stuffs are the most important thing. The number one you should understand of. Okay. So if you also do this, if you also know how to manage your risks, you won't even care about showing off your lot size or stuff like that. I feel like those who have the time to cover up their lot sizes because they don't know what risk management is. I won't mind you laughing at me that I'm using 0.01 lot size to trade when I know I'm managing my risks. Bro, if I should build that account, there's no way you would fund me. You would not fund me. Instead, you would encourage me to try as much as possible to, fund again. And then you encourage me that, that's how the market works. Welcome to the game and stuff like that. But none of you would offer to give me money to fund my account again. So why am I using 0.1 lot size? And you're telling me that, bro, your lot size is too small. How are you supposed to make money from that? If I should use 0.1 lot size on 3 trades in a day, and I target $5 per trades, and I'm using my risk management in 2 weeks, I should be able to scale up to $100. Because once that's capital, let's say the capital is $20. Once that capital is up to $40, I could decide to adjust, my risk management to a 0.5% of $40. You get what I'm trying to say? So this is very important when it comes to trading because this doesn't really have to stake on 0.5 lot size. That's why I use 0.5% because if I should trade up to, is a 10K account. If a 10K account should get up to 11K account, that doesn't mean that I would still be using 0.5 lots. 0.5 lot is not 0.5% of $11. So don't get me wrong. I'm not trying to tell you to always trade with 0.5 lot size or 0.5% or 5% on a 100K account. I'm telling you to manage your risks based on 0.5%. Okay. So if I'm using $20 accounts and I'm risking just 0.01 lot size and I make $5 per trade, that's already more than I'm supposed to be making per trade. And then let's say I scale that account to $40 and I adjust my lots and my risks to 0.5% and I scale it up to $60 and I adjust my risks to $60. Again, 0.5% of $60. And I adjust again. In less than 3 weeks, I'm already up to $100. In a month, I'm already up to $300. In 2 months, I'm already up to $600 or even $1,000 because I would have to adjust again to 0.5% of $500. You get what I'm trying to say? And tell me in a year if you won't be profitable even up to $10,000 accounts. You get what I'm trying to say now, right? You see, this is more important than drawing up this. So you have to understand what works for you and how you want to place your trades, not just from the charts and then not just the other block, but how much you want to risk and what you want to see before you take your trade. Okay. Okay, now this is another tricky one, which a lot of people don't understand. Some say, I take profit when it gets to 20 pips. I take profit when it gets to 30 pips, stuff like that. But what I do is this. What's my first TP point? This means, what do I want to see first before I take profit, right? What's the first thing I see before I take profit? Okay, my own first TP point is the external low. Now, this is a structure. Okay, if I was trading off this, sorry, if I was trading off this, and then let's say I got an entry from the momentum once price shifted, let's say my entry was here. Sorry, this my entry was here. Then my stop loss was here. Then, my general aim was to trade into this imbalance. All right. So where's my first take profit point? Where would I take profit first? My first take profit point would be once we break this low. Because I know this low is an external low, and external lows are always liquidity. There could be a reaction after this low has been cleared and price could do something like this. So my first TP point is once this low has been cleared out. Once this low is cleared out, I take a little percent off, and that's also my break-even point. My break-even point is also once an external low or the external low of that particular range I'm trading within has been cleared. Now, if I was trading off this is the external low, external high as well. Once this high has been cleared, I take a little percent off, maybe 0.2% off, at 0.5%, which I'm trading, and then I break even on 0.3%. Now 0.3% goes back up, to give me more profit. Let's say clear out the external high of the higher time frame range. Now we know price has to return into discount, right? If my POI is within premium of that range, I would close because I'm expecting price to return into discounts. Now that it doesn't matter how many pips I've gained, the pips is not even in minority. It's not important at all. Pips is not important at all. What is important is what you're doing and how much you're managing your risk. Now, price has cleared at the external low. My entry was at this point. What do? I would close this because I'm expecting price to return into discounts. I'll wait for price to return into discounts and wait for a reaction to look for an entry. Okay, so that's the importance of the whole thing. It's not how many pips you want to make per trade before you take profit on that. It's what you want to see. Now, once this has been cleared out, I take an entry from here. Let's say I take an entry from here, and then my stop loss was around this low. My overall TP would be this external high, right? But I would take 2% off once this high has been cleared out. Because this structure is like this. And this would be the external high of this. Once this high has been cleared out, I'm expecting price to return into discount of this range before going back up, which actually happened. So if you're looking for another entry, let's say you're trying to scale, your second entry would be within the discount of this range. You see, price did return into discount, but then you don't know, you don't control the market. So there's every possibility that price could do something like this. So since we don't know if that is going to happen or not, what do? We manage our risk, which is breaking even and taking off 2% from that trade. Why do I pick 2% to be precise? Is because if this setup to get invalidated again, let's say price comes back down close to my POI and then does something like this. Okay. And I decide to take another entry from here because I see a break of structure. And the price, that is a trap and price breaks down. That means I lost this trade, right? And then I got stopped out on break even on the second trade. But that won't be up to, let's say, $10 because I'm running my rates. This is a low setup rate because now price has broken structure to the downside and it's testing the premium of this other range. This could still help. So this is also a low probability trade. So I reached just 0.3% on this trade. And then I'm break even on 0.3% as well. So if this stops me out, this won't be enough to take out the previous 2% which I took off this trade. What am I trying to say? The 2% which I took out before breaking even on this trade would stand as a cover up for what I'm going to be losing from this trade. You get what I'm trying to say? Now, in all, I never lost anything. I just lost the 2 trades, but my capitals are safe. Okay, the 2% is going to cover up for the loss which I took from this trade, and then this trade was stopped out on break even. You see how the calculation works now, right? I never calculated any pips or any of those stuff here, but you could see how safe every other thing is because I have an understanding of what I'm targeting and what I want to see when it comes to price action. Okay. So now we have just 8 minutes left in this section. Let me take this out. And then you could copy this. Let me screenshot this as well and send to the group for those who did not attend the section.
Oh, one more thing. How many losing trades do you want to take in a day, or you call it quits? For the day?
Yeah, I did see that as well.
Oh, okay. I didn't see that.
Yes, it's a very important one as well too. Very, very important. You can see it's right here.
Oh yeah, sorry, I didn't say.
It's okay. Let me even make that a different color. That won't be possible. I would love to make that a different color. So it's very noticeable because it's a very important one as well. Because that could invalidate the whole of this if you miss that. You can validate everything if you don't get that on check. Because if you don't have a maximum amount you want to take, you want to lose before leaving a trade, and you take losses 3 times. There's no way your next 4 to 5 trades are going to be winning trades when your psychology is already messed up. There was one time when I blew my one of my accounts, but that was around February this year. The mistake I did was that I was at the bank. I was being frustrated, but I was waiting. I was waiting for my turn because in Nigerian banks, you wait and wait and wait. So I was waiting for my turn and I got frustrated because the market was moving. I couldn't see well because I wasn't with my system, but I was trading from my MT4. So I took a trade and I lost it with no proper confirmation because I was trading from my MT4. I was busy, but I was trading. I was already breaking one rule, right? So I know I was doing something wrong, but sometimes we are humans. We are meant to break rules. So we pay the price for breaking our rules as well. So that day I did pay my own price by losing the account. So I took that trade, I lost it. I took another one and I lost it. I took the third one, I lost it again. What came into my mind is you have actually traded 3 times today, and that's the maximum you want to trade a day before you call it a day. I was like, and then I think the security man at the bank also got me angry again. And then I was angry, extremely angry now. And I went to my MT4 and I saw the same setup which invalidated me was now going in my direction. And I got extremely pissed. I just lost this trade and then it's still going in my direction. And these guys are pissing me off. So I eventually took another trade again, tried to join the trend, and then price went against the direction again and took out that account. When the account was gone, then I went back home. When I went back home, I saw that almost every rule in my book, I was invalidating every single one of them. But the one which I did, which would have saved me that day, if I had respected it, was this. How many losses before I quit trading a day? If I had stopped trading when I took the 3 losses, every other thing wouldn't have been invalidated. But once I invalidated this, everything became useless because there's no way I would know how many pairs I want to trade. I wouldn't even pay attention to that. I wouldn't even pay attention to what section I'm trading in. That's because I've already lost everything for that day, but I'm still trading. So there's no way all this would be effective when this is not being respected. So it's a very, very important part as well, which you have to put in notice. So any other one? Does anybody remember any other one before I take a screenshot?
Okay, I have a question.
Okay, question.
Yeah.
Okay, go on.
How about if you have a FCMO account or an NFF account when you have to scale up to have an 8% of
I can't really
account?
hear you properly.
I said, what if you have a FCMO account or MFF account when you have to scale up to get an 8% of the accounts in a particular period?
Okay. Let's say you're on the challenge mode and you're supposed to make 8%, right?
Yes, yeah.
So what I did was this. I'm being told to make 8%, and it's a 10K account, which means I'm risking 0.5%. I'm using 0.5 lots. 50 pips a day. 50 pips with 0.5 lot is more like 50 times 5, right?
Yeah.
That's already $250. If I should take 2 winning trades a day, 50 pips, that's already $500. So I've already made 5%. If I should lose one, losing 20 pips, that's like $20. That's 20 pips, 20 times 5, right? That's like $100. $100 is gone, right?
Yeah.
80. Is it 80 or 100?
You said 50, it's 100, it's 100.
Okay,
If it's
so
5,
yes, 100 is gone. 100 is gone. I still have 400. I've done 3 trades a day and I'm done. The next day I do the same thing. If I should make 400 as well, I'm done with the challenge. So you see, this still makes up for the challenge if you do it properly. In 2 days, you're already done. And besides, you were given 30 days to pass a challenge. If you use proper rate management and a proper understanding of what you're doing, it won't even take you up to that 30 days. But still, you could still reduce your risk. All right, let's say you're not making 50 pips, you're making 30 pips. 30 pips is enough to even help you pass that challenge in 5 days if you're able to follow your risks properly, your risk management properly. You're not desperate. You're not running after the trade. You're not trying to force the trade. You're just waiting for your proper setup with all your confirmations before you take the trade. Even if not all, or majority of your setup of your confirmation. And if it's majority of them and not all, what do? You use a low risk management, right? So you use a high risk management, which is using risking lower than you would normally risk on a high risk. Okay, so it still adds up. This is still what I use to
Boss,
pass
I think you said something now that was kind of important. I think waiting for your proper setup rather than running after a trade. I don't know if it should be part of the risk management. I don't know.
Waiting for your setup.
Your proper setup, yeah.
If you don't even check any of this, if you don't confirm any of this, your setup would be invalidated. I think this already, enough of all this is just your proper setup, because all this this is your proper setup. If all these are confirmed, then the setup is a proper one. I don't think that one is that important to put there. Someone asked a question. Please, sorry, this question is not from today's section, but rather the previous section. What do you say that we have less than 1 minute, so I'm trying to do that the right time frame. Oh, let's treat that weekend. We have section for market structure. So we will treat this, okay? For now, we're doing psychology and risk management, not technical analysis. So weekend, I'll be sending the PDF file probably today or tomorrow for market structure, and then we will treat anything concerning technical analysis, okay? For now, let's just continue with the risk and try to understand more of this part. Just keep your question. Weekend, we would attend to that, okay? So we have less than 1 minute. This section is about to end. I'll send this to the team once we're done, and then you could go through it and form your own plan. Send your plan when you're done to the group, and then others could also learn from that. And I could also correct you if you have